Local trade is expected to sustain gains this morning. Metals lifted the JSE higher yesterday, while the rand firmed as investors shrugged off U.S. consumer inflation data that was hotter than expected. Chief Investment Officer and founder at Makwe Fund Managers, Makwe Masilela, joins us now for an overview of the latest market moves. Makwe, good morning, and thanks as always for your time. So let's start with that overview of how the general markets are faring so far this morning.
You know, after closing up nicely 1% yesterday, we just managed to open flat today. And as you said in your intro, markets managed to dismiss that hotter than expected CPI. But today we are starting a session looking forward or focusing squarely on their producer price inflation that will be released later, and also their retail sales. As we know that the U.S., just like most economies, more than 60% of the economy is driven by consumer demand. Hence, those retail sales numbers are important. And also the producer price inflation will either confirm that that hotter than expected CPI was just a minor thing or is something that we have to worry about going forward.
So the oil price up today, and what is driving that?
All because we've seen Ukraine attacking some of the refineries in Russia, and also we've seen that when it comes to the inventories in the U.S., for the first time in 7 weeks, they've managed to have some drawdown. That's an indication of demand, and we have seen that oil prices so far this year, it has been up, but it has been range bound so far because OPEC is trying to cut production, but unfortunately countries outside OPEC are increasing their production, and also there's a concern when it comes to the Chinese demand.
All right, so we're going to look at some interim financial results now. Let's begin with African Rainbow Capital Investments. They've got their interims. Talk us through their performance.
It's an investment holding company with some diversified portfolios. I mean, the obvious one are your Time Bank, the likes of Rain, and we have seen that unfortunately they had to face some unfavorable conditions, high interest rates, high inflation, load shedding, issues at our port. Trade conditions have not been that great, the contracting economy, but for the fact that they've diversified, they did at least manage to be cautioned by that, and hence we've seen that when it comes to their intrinsic net asset value, it went up by 4.6%, and the net asset value is very important for them because this is an investment holding company, and their profits as headline earnings per share up a whopping 410%.
Yeah, of course. And then what about Standard Bank? What are their numbers looking like?
Not too bad, and we've seen their headline earnings are improving to 27%. And yes, we've seen that out of that, Africa region is contributing almost 42% to the group headline earnings, which is great, I guess. But we know that the guys, they continue to make good money, especially from high interest rates. Looking to their total income is up nicely, 20%, dividend per share to increase by 18%, and they've managed to increase their customer base by almost 6% to almost 18.8 million. And the digital part of it, especially in South Africa, increased by 8%, and the digital transactions up a whopping 30%. So we hope that going forward, high interest rates are not going to start biting, as we've seen that is happening on other banks. And remember, Standard & Poor's told us that they focus that SA banks might lose almost 74 billion or 1.4% to what is called unpaid loans.
All right, Makwe Masilela, thank you as always for that snap preview or overview of what's happening in the markets. And we'll do it all again tomorrow morning. We'll have more analysis on how the markets are waking up in the morning. So